Hello and good day. This is the daily analysis of the Bitcoin symbol on the 21st of February. The price, as previously predicted, after collecting liquidity, moved toward the buy side but faced selling pressure.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
And ultimately headed toward liquidity. It moved toward the side and the limited liquidity pool, entering the 4-hour order block zone. And currently, it is clearly in a bullish correction, which is expected to move upward, collect buy-side liquidity, and the limited liquidity pool. There is also an internal liquidity level in this area that could attract the price toward itself. If we identify weakness in the bullish trend and form a trading strategy, we can use this price action opportunity to take a sell position. The stop loss can be set behind the swing at the 70,126 level or behind the order block zone at the 71,136 level, targeting the swing low and lower price targets. With the analysis of the 1-hour time frame for the Bitcoin symbol, we can see the price movement is in a consolidation phase, and after collecting sell-side liquidity and moving toward an external range, it is now gathering buy-side liquidity and heading toward another external range. There is an order block in this area, and if liquidity increases in the market, it can collect sell-side liquidity and then resume its bullish trend to gather liquidity from the liquidity pool area. There is also a rejection block in this section, and if a sign of weakness appears in the bullish trend and a significant level or market structure shift forms, we can use this opportunity to enter a position targeting the swing low. Additionally, by examining Bitcoin ETF funds, on the dates of the 17th, 18th, and 19th, we see that the net inflow was negative and liquidity exited the funds. However, ultimately, on the 20th, a positive liquidity inflow entered the funds, which could indicate a positive outlook in the market. By examining the fear and greed index and the market sentiment, we see that it is moving and coming out of the extreme fear zone. If it enters the neutral zone, the market's outlook will have changed, and the market could shift from a bearish phase to a bullish phase. Also, by analyzing the SOTWIL liquidation levels, we can see the liquidity on the buy side and from the sell side as well. The price can move upward, absorbing the liquidity on the buy side from the 68,225 level or the range just above 69,000 up to the 70,000 range. After that, it may face increased selling pressure, pushing it toward the liquidity on the sell side at the 65,236 and 64,500 levels, and ultimately targeting the 64,000 range. By analyzing the wall orders, the closest levels with large order blocks are around 69,800 up to the $70,000 range, which can attract the price toward them. If market volatility increases, these orders may get filled, causing the price to move downward. The nearest support level in the market is at $65,000, so after absorbing the liquidity on the buy side, the price could move down into this 65,000 range and potentially get rejected from this area. However, if selling pressure continues in the market, lower levels may come into play. It could even target the $60,000 range. Furthermore, considering the news about the Clarity Act, the crypto market is now entering a pivotal week. This is where the US Congress and the White House are finalizing the Clarity Act. The main point of contention right now is stablecoins, specifically whether they are allowed to pay yields and incentives. Should they be given to holders or not? The outcome of these negotiations could determine the future path of crypto regulation in the US. The potential positive impact that this news could have on the crypto market is that if a balanced agreement is reached, legal clarity will increase, and regulatory risks will decrease, and the path for institutional investors to enter the crypto market will become smoother. This is something that can help the sustainable growth and maturity of this market. Now let's look at the 15-minute time frame. This is the Bitcoin chart. Now, using the ICT Killzone indicator from TIFF Lab, we can identify the kill zone areas and the trading sessions, where we can see the price movement during the Asian session. After liquidity was collected on the buy side during the last two sessions, they were actually taken out. At a limited order block in the London session, we see that it was accompanied by selling pressure, which we already know. In the current day's London session, the price collects liquidity on the sell side towards a BPR zone at the 67,466 level, down to the 67,312 area, and reacts there. And after that, there should be a bullish move to collect liquidity on the buy side and enter the rejection block area. However, if liquidity in the market increases and buy orders remain strong, the price could continue its upward trend without any pullback. It could continue its bullish movement. It would enter the rejection block area and after that, set its movement target to collect liquidity on the sell side. Wishing you success and profitable trades.